Good morning, it's Market Day Report. All right, welcome to a Wednesday. It's the second of 4 trading days this week. And a crop progress report out from USDA yesterday. A bit of a surprise. We'll have that for you in a moment. First off, let's start with the overnight trade and the corn market. And a little higher on the overnight session, December up a half penny at 4.47. And speaking of corn, that's actually where we'll start in a moment with Brian Hoops. Soybean trade in the overnight session, new crop at 10.46 1/4, down 4 1/2. And this is following a higher session yesterday for soybeans. Now the wheat market selling off yesterday with double-digit losses, but the overnight action saw a 3 3/4 cent move higher for wheat at 5.32 1/4. And hard red in the overnight session up 5 1/4, 5.29 3/4. Spring wheat December 6.34 3/4, up 7 1/4. And the cotton market following a lower trade yesterday. Well, December in the overnight action, 68 cents, down 32. All right, let's go to Brian Hoops, Midwest Market Solutions. All right, Brian, I want to start with USDA's crop progress. It actually is suggesting a very weak start for corn.
Yeah, good morning, Tony. It's weak relative to the expectations. The expectations were for 75% of the corn crop to be good to excellent, and we didn't come close to that. It was closer to 68%, which is still 2/3 of the crop off to a good to excellent start. That's pretty decent. That matches where we were in 2023, but not near as high as what a lot of the trade had anticipated. So a swing and a miss by the trade there, but very muted reaction from the corn market overnight. You look at the forecast, and it's exactly what we need. A little bit warmer, a little bit drier. There's areas that still need to plant corn. Now, we're ahead of nationwide. We're ahead of where we normally would be for this time of year. But we still need to plant southern Illinois, southern Indiana. That Ohio River Valley really needs to catch up and get some crop in the ground. And then they're going to need some, warmer temperatures because they have plenty of soil moisture to work with. States like Iowa, Missouri, looking at very highly rated crops right now, over 82% for Iowa, 76% for Missouri, rated good to excellent. Those states are off to a good start. But it is some of these states that we are concerned about, calling them the fringe states, that are going to struggle a little bit. Minnesota right now struggling, very cool conditions, very wet conditions, and that's where a lot of this crop is off to a slower start. The Western Belt seems to be in a little better situation than the Eastern Belt at this time, but if we warm up, there's plenty of moisture to work with for the time being. That would be a real benefit to the crop and improve those ratings. And I think that's what the market is kind of focusing on, is that 6 to 10 day, 8 to 14 day outlook that is looking at warmer and drier conditions ahead.
We're talking with Brian Hoops, but we'll take a break, come back and talk livestock futures next. Market Day Report continues in a moment. Interesting trade yesterday in the livestock markets. And first off, we'll start with the live cattle market and then kind of explain what happened. 215.12 on the June contract yesterday, and it was 67 cents lower. $1.15 lower on the August at 209.30 and the October at 207.07, down $1.02. This is where it gets really interesting though. Feeder cattle. We had a range on the August contract of over $8. 298.15 is where we finally settled in, and that was down to 22. Then look at the September contract. There's another 8.5 cent, a little more than that, trading range, and we settled, well, closer to the high for the session at 297 1/4. Down 210, lost $2 on the October contract at 295.35. That's a pretty wide range, and we'll talk with Brian Hoops in a moment as we explain what happened. Then you have the hog trade. June, 80 higher, 99.10, and July at 102.15, up 60. And the August, with a 102.17, up 90 as well. Let's bring him in. Brian Hoops, Midwest Market Solutions. All right, so just trading in the red yesterday, and then all of the sudden, the market plunged. That especially the feeder cattle market down I think nearly $6. What caused that yesterday, and why did we recover some of those losses?
Yeah, we opened a little bit firmer in the live cattle after that cattle and feed report. We were trading higher for a while. Then things started to soften up and plunged, as you mentioned. Now, there was a report come out of it's either a radio station, TV station out of Trenton, Missouri, which I have no idea where that is, but they had posted that there was screw room found in Missouri somewhere. And the US and they had said it was confirmed by the USDA, and that really plunged the markets. And so futures markets sold off hard, like you said, over $6 losses in feeders. The fats were under some heavy liquidation pressure. But as people began to check the USDA website, there was no confirmation of that, and it was considered to be some sort of a myth, a rumor, or just outright false information. And unfortunately, that's kind of the trading world we live in now. Is a tweet or a text message or something can get spread around, and it can really set off a chain of events like it did yesterday. Now, once it was debunked, and the USDA has no confirmation of it, prices did recover off of their lows, and they are called higher this morning. We're going to try and get back to more of a normalized trading and looking at more of the fundamentals. And right now, show list numbers are a little bit larger than last week, but only 217,000 head. Cash calls again steady to a little bit better. And so we're still looking at prices that want to try and move higher. And a lot of that selling that took place yesterday could turn into some buying interest this morning. Maybe some people trying to reestablish those positions that they had given up yesterday.
And part of this concern is I heard an interview with Elliot Dennis, University of Nebraska-Lincoln livestock economist, who said if New World screwworm shows up, it could hit Nebraska into the millions of dollars. And then he said Texas into the billions. So it could be a big deal. We'll keep an eye on it. Again, Brian Hoops is with Midwest Market Solutions.